What's up, everybody? I'm just going to do a quick update because I did a podcast today with my friend Matt Franco, and you can check it out. But I want to talk about the Fed meeting. So Powell did go, as he always does, with exactly what the market expected, a 25 basis point increase. I thought maybe he'd have some balls this time because there was something like a 16% probability based on where Fed fund futures were trading that he would not hike rates at all. And actually that 16% jumped up a few percent from just like minutes before the meeting. So I don't know, I thought that was like could have been an indicator that the Fed would hold steady, but they didn't. And so then it was kind of like a very lukewarm reaction. But of course, the big action these days comes in the press conferences, where I think he's just a terrible communicator. You know, the thing I got to say about Alan Greenspan, when Greenspan was running the Fed, was that, you know, he was able to obfuscate, like he had a way of speaking, and I spoke about this before, that like nobody really knew what he was saying. He had just a way of expressing things. And it's funny, if you read his book, and I forget the title, but if you read his book, he said that he learned that, I think he said he learned that from his father, who happened to be a stockbroker, that, the way he used language was like inscrutable. Like you couldn't really tell what he was saying, you know, but that's not Jerome Powell. I mean, he seems to stick his foot in his mouth every time he opens it up. But here's the thing, folks. Again, today, with the drop we had at the end of the day, I think is really irrelevant. You know, I said yesterday that the whole thing, yesterday's rally could be reversed by the Fed today. That's what happened. Look, we're still seeing this month average monthly leading spending flows of like $623 billion. I keep coming back to that. I mean, the Fed said it's going to hike one more time in 2023 and then no cuts. So, big deal. I mean, so we're going to be at what? Like 5 or 5.25%. I think that most of the banks were factoring in. Jamie Dimon was saying something like a 6%. That's where we're going to be. No more cuts after that. And so everything is baked in. And the only thing we got to get through, well, not the only thing, but one thing is the April tax drain, which at these levels of leading flows, I think the April tax drain is not going to be so bad. Remember last year, I mean, April was terrible because it wasn't only because of the tax drain, but it was when the Fed was just beginning to raise interest rates. And, you know, I spoke about this in the past. Like initially when the central bank raises interest rates, the discounting effect on financial assets, you know, that has a big impact. And then you reach a point, I call it the inflection point, where the income generated from the rate increase, that ends up surpassing the negative impact or the discounting effect from the rate increases. By the way, on that note, if you watched my interview with Louis Borsellino last week, he talked about like in 1980 when he sold his mom's house. You know, his father was murdered, actually. His father died, and then they didn't have any money, they didn't have any income. He sold his mom's house and put it in a CD, earning 20%. So his mom's house was, he said he sold it for 250 grand. He put it in a CD earning 20%. You know, that's $50,000 a year. That paid all her expenses. So this is an aspect of rate increases that a lot of people don't consider. You know, they only consider the negative aspect. Well, oh, you know, that my credit card bill is going to go up and this and that. It's a redistribution of income. I spoke about this today on the podcast with Matt Franco. I said all of these things, you know, they're severely misunderstood. I mean, they're just redistributions of income. It just takes it from one sector, it goes to another. The income, like I said, it doesn't fly out into outer space. It just gets recircled around into a different sector. The only time we have to really worry is if, when the government drains taxes and, we get that 4 or 5 times a year. But those are temporary, because then they continue to deficit spend, so the money is spent back out again. It doesn't necessarily go right back out to your pocket, but it goes back into the economy, the swimming pool. And if you had, the capacity, the ability, the wherewithal, the smarts to earn the money in your business or whatever you do, your work, you're going to earn it again. So I'm not so worried about that. I know when those things are going to happen. Everybody knows when taxes are going to happen. So yeah, that's all I wanted to add to today's Fed meeting. The volatility is always comes at the conference, the press conference, because that's just Powell. That's just Powell. Some people have the ability to speak without creating big waves or reverberations. He's not one of them, which is, to me, it's kind of unusual, because he's a lawyer. And in general, I find that I might be wrong, I don't know, but I find lawyers they're highly intelligent, and they know how to speak, they know how to communicate. But he just may be out of place in this role, I don't know, as Fed chair. Anyway, that's it for today's update. Please watch the podcast, and I'll see you guys tomorrow. Bye.